Welcome to this week's Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. We know a USDA hearing took place. I shouldn't say USDA, a Senate Ag Committee hearing took place. And of course, the biggest topic discussion was these cattle prices and what is happening, the trickle down effect. And we're going to kind of look into it as Brad Kooima joins us. He is with Kooima and Varlick out of Sioux Center, Iowa. This hearing, how does it affect the cattle market? How does it affect the consumer? And a little spin, we in ag have been talking about these cattle issues for a very long time. Suddenly it's got the attention of mainstream media. So having said that, does that mean there might be a little bit more push to find out what's going on as consumers start to talk about prices as well? So I think, Brad, we got to start right there. This Senate Ag Committee hearing that took place on Wednesday, good or bad, depending on how you look at that information, at least it's being talked about.
Well said. I am delighted that they finally got the first step towards opening up the possibility that, anybody that's listened to me know that I support a regulatory solution. That unfortunately, I believe that that's probably the only solution. And now we got to make sure we get this solution right? So, we don't have to debate. Personally, I don't have to debate that. There are many on that ag hearing that was the same argument we listened to at the beginning of that hearing, of the justification for the AMAs. And I get it. There's a place for some of those AMAs, but they are not an end all either. And then some of the dialogue in it where, we're supposed to believe that it doesn't make any difference whether you've got competition for what we're selling. Come on. I don't care how many letters you have behind your name. You're going to tell me that it doesn't make a difference if there's 3 people or 1,000 people trying to buy my product. You're not going to make me believe that does not squelch competition. So, some positive things. There's some of the tired arguments that I've heard 100 times. I guess I was tired of it again yesterday. I thought that some of the other direct questioning, from some of the senators that would be a little more friendly to the North. Senator Grassley, I thought Senator Fisher was excellent. I thought Senator Thune was very good. The name escapes me. The gal from Mississippi, I thought, asked some very pointed questions that were spot on. And I thought Justin Tupper from St. Ange did a great job of representing the independent cattlemen. So there was good things. Now remember that, something like this is your first step toward some sort of, legislative movement. And I'm of the view that, that this increased awareness, this increased, what's the word here? Pressure, political or otherwise, that's been put on the commercial. Is that why we're a little bit better? I don't know that things are any different, from a broader supply demand standpoint. In fact, boxes are quite a bit lower than they were here a week and a half ago, 2 weeks ago, and yet the cash market's higher. So coincidence? You tell me. It's a little awkward, but I'm also proud of the fact that there was some broader coverage of this matter in some print media. I was part of an interview Tuesday for the New York Times, also in the Minneapolis Tribune and in the Seattle Times. And not that it's such a big deal. There was a couple other people that were interviewed as well. But I think that as you led into your question of now the consumer's pissed. Can I say that?
Mm-hmm. Yeah, you can say that.
Yeah. So, as a producer, we feel like we're not getting our slice of the pie, right? I mean, Packard's making all these big margins. We've talked about that, right? Now the consumer is becoming aware of like, well, geez, the guy that's raising them is losing money and we're paying twice as much for a ribeye. What's up with that? So is this a great way to tackle the problem? I don't know, but it's a way. And I guess if that helps tell the story, I'm happy to do it. One last thing before then I should let you ask me a question. Sorry. What frustrates me is why people are so afraid to try something to change this. Because what we're doing right now is failing the North, is failing the independent cattle feeder. This business model is sure to fail the independent cattle feeder, and in turn the cow-calf guy, because we're his best customer. So I'm frustrated with why this dragging of your feet of, oh gosh, what if we get it wrong? Well, then we'll fix it, because what
Mhm.
we're doing right now is not working.
You've got the attention of consumers. Zippy Duvall, president of the American Farm Bureau Federation, made a comment here a while back that cattle producers need to be aware what's happened in the hog industry and what's happened in the poultry industry will be devastating if it happens in the cattle industry.
Absolutely. You know, throw the broiler industry into that for instance, right?
Mhm.
Moving the market vertically integrated doesn't save anybody any money, not the consumer either. Don't let anybody tell you that. I mean, you can see that research has shown that over and over. And more importantly, what it does to the small town, what it does to your library, your hospital, your schools, your churches. It's a way of life that we're fighting for here, not just a living. So yeah, you touched a nerve. We got to get this one right.
Well, hopefully the nerve has been touched with more folks and it'll continue to stay on the forefront. So, are we going to see some improving cash for these cattlemen?
Yeah, your listeners are going, are we ever going to talk about the cattle market? Or are we just going to let them? Um, I think yes. Short answer. The box beef is going to go down. So what? When it went straight up, we didn't get any benefit for it on our country cattle anyway. It's the time of year when one would expect that we're going to move into a BLT and a hot dog and hamburger time frame, right? Yet our demand generally, don't kid yourself, is off the charts good, both domestically and globally. So I think the irony for me is that I expect, as we see the decline in the box beef, I think cash cattle are going higher. The numbers in the north just, they are not there. Our show list here are still very, very small. It's the end of June. This calf crop was light coming in and it was late coming in. Okay, we finally are seeing a steep decline in the weights the last 2 weeks. We've been talking about when is this going to start to happen. It finally is. I think a combination of the cost of gain, of course, and the heat. But the last week's weights are down 7 pounds now from the week prior and much below a year ago, which you would expect because of COVID, but much below a week prior and the week before that. So I think, we're getting ourselves a little more current. And I think maybe a little bit of political pressure is also helping, maybe to edge this market a little bit higher. But it's been different this week. I've had bids from 5 or 6 different packers. Hey, competition. You suppose that had anything to do with the fact that we were a little higher? I think you got a packer that's closer to the knife, and more of them that are competitively bidding, and that's translated into a little higher market. So I'm optimistic, and some of the market's driven by what's going on over there in the grain market, of course, as it affects feeders and the deferred fat cattle. But if I had to just guess the fundamentals, I think next week when we do this, we'll be talking about a little higher market again.
All right, we're going to end right there on an optimistic note. Thanks so much, Brad.
Welcome.
That's this week's Cattle Call. Just a reminder, folks, commodity futures and options involve substantial risk of loss, and they're not suitable for all investors. That is the Cattle Call right here on the Rural Radio Network.